What's going on, guys? My name is Arjun and welcome back to my channel. 2021 has already been a busy year for new companies coming to the public markets. Most of these companies are opting for the traditional route of going IPO, such as Bumble and Affirm. But there are some companies, such as Roblox and most recently Coinbase, that have opted for a less traditional direct listing. These are the two main ways that companies can come public to the market. But today I wanted to go over what the differences between the two are and talk a little bit about what it may mean for you as an investor. So first, both an IPO and a direct listing will result in the same thing. You'll be traded publicly on the market. But there are some key differences between the two. So first, the IPO process. In this process, the company will issue and offer new shares to the public. This is a long process that is done using underwriters, such as investment banks, and an executive roadshow to sell the shares that they're offering. On the other hand, there's the direct listing. In a direct listing, the company does not issue new shares. Instead, they list their existing shares directly on an exchange for the public to buy. This process does not involve any intermediaries. So let's go a little further in depth now and see what the main differences are between the two. One of the major differences is that in an IPO, you are raising new money for the company by issuing new shares. Whereas in a direct listing, you do not raise new money for the company. You're simply just selling existing shares. The IPO creates dilution for the existing shareholders because you're issuing new shares and their shares become less valuable. In a direct listing, there is no dilution for existing shareholders. An IPO is very costly to the company because it involves intermediaries such as underwriters. And the underwriters can charge anywhere from 3 to 7% of the IPO proceeds. So, for example, if you were a company and you raised $100 million in an IPO, they may charge anywhere from $3 to $7 million of that money. Whereas a direct listing is much cheaper because there are no intermediaries involved and the employees and the company just get to sell their shares directly on the market. An IPO typically involves a lockup period, which means that some of the existing shareholders and some of the early shareholders in the company will have to wait to sell their shares. Whereas in a direct listing, there's typically no lockup period. One more major difference between an IPO and a direct listing is that in an IPO, there is somewhat of a guarantee of a share price. Basically, what happens in the IPO process is that the company approaches the underwriter, and the underwriter says, I will buy your shares at this price, but first, let's try to sell them to other large investors and see what price we can get from them. Otherwise, the underwriter agrees to buy it at that price. In a direct listing, there is no guarantee of a price. So there is some risk involved with that because you're simply at the whims of the market. There are a few more points I want to make about direct listings. They're becoming increasingly popular with some of the more mature companies who typically don't need to raise cash, but they want to offer liquidity to their employees who have been with them for a long time. So some companies like Palantir, most recently Coinbase and Spotify, all opted for a direct listing. They didn't need to raise cash for their company, but instead they wanted to offer their long-standing employees who have a lot of stock options a way to sell those easily and give them liquidity. So for you as an investor, if you're investing in a direct listing early on, it could be a little bit more risky because there can be more volatility in the market because there is all of a sudden a way for employees and people who own a lot of the shares to have liquidity and sell them on the market. So there'll be a lot of sellers early on. But regardless, whether you're investing in a direct listed company or an IPO company, make sure to do your research. Take the time, read the prospectus, and understand why you want to invest in the company. And also please have patience with your investment. Thank you guys for watching this video, and if you enjoyed it and want to learn more about business and investing, comment, like, and subscribe to my channel, and let's head on over to the next video.